Hey friends, it's Carla Dennis here, and today we're talking about something nobody likes to talk about, but everybody needs to hear. It's the thought of the IRS knocking on your door. Makes your stomach drop. But here's the truth. Audits don't happen randomly. The IRS uses data and algorithms to flag certain returns. Let's break it down, the top IRS hotspots for 2025 and what you can do to stay safe and out of trouble. But before we jump in, I'm gonna need you to like, comment, and subscribe. Now, let's get after it. What changed in 2025? The IRS is more powerful and more funded than it's been in decades, thanks to increased budget allocations and AI-powered systems. They're auditing more high-income earners, business owners, and self-employed individuals than ever before. High-income earners underreporting income is a big deal. The IRS has publicly stated they're focusing audits on high-income taxpayers, especially those who own multiple businesses, those who invest in real estate, those who claim complex deductions, those who trade crypto or digital assets. Here's a strategy you could use. Cross-check your income with 1099s, brokerage statements, and any digital wallets. The IRS is using matching tools, so your numbers need to match theirs. And trust me, you can run, but you cannot hide. One audit trigger is too many write-offs on your Schedule C. If you are self-employed and file a Schedule C, the IRS watches for write-offs that look too high compared to your reported income. Here's a strategy. Keep your receipts, log your mileage, and back up every deduction. Use a bookkeeping system, not just your memory. And remember, a legitimate expense is ordinary and necessary in the course of business. Real estate losses under passive loss rules. Many try to use rental losses to offset W-2 or business income, but the IRS has strict rules here. Unless you are a real estate professional under IRS standards, your losses are passive and generally cannot offset non-passive income. Here's a strategy, my friends. Keep a detailed time log. Track hours worked on your rentals. Show involvement in the decision making, repairs, and management. Big charitable donations without proof. Donating to charity is noble, but when you write off large donations, the IRS wants receipts. Now, here are some common audit issues. Claiming non-cash donations over $500 without the proper forms. No written acknowledgments for donations over $250. Donating to fake or unregistered charities. Now here's a strategy. Get a receipt for every donation. Use Form 8283 for donations over $500. For gifts over $5,000, get a qualified appraisal. Give generously, but document every dollar. S Corps not paying a reasonable salary. Business owner distributions avoid self-employment tax. And if you take distributions without payroll, this is a no-no. But here's a strategy. Pay yourself a reasonable salary based on your role in industry. Run actual payroll with withholdings. File a W-2 on time. And if you're not sure what reasonable compensation means, consult with an expert tax pro. This is a top S Corp audit trigger every single year. Crypto and payment app reporting. Starting this year, platforms like Venmo, PayPal, and Cash App are required to issue 1099-Ks, and the IRS is tracking crypto wallets. They're tracking exchanges. They're tracking blockchain data more aggressively than ever before. So here's a strategy. Keep records of your cost basis and sales price. Reconcile your 1099-Ks with actual income, and do not try to ignore the transactions that you believe are not reported to IRS. But let's recap. Number one, the IRS is stepping up audits in 2025, especially for high earners, S corps, and real estate investors. Number two, common triggers include unreported income, inflated write-offs, crypto transactions, and passive losses. Number three, to stay safe, document everything. Document income, expenses, donation, business use of your home or your car. Number four, and when in doubt, get a tax pro and make sure it's a tax pro that is an expert and understands and that are going to be in your corner. That's important. If you're unsure whether your return will survive an audit, don't wait until the IRS calls or knocks on your door. What you need to do right now is like this video, subscribe for weekly tax saving tips that make sense. Drop a comment with your audit concerns. I'll share what I can. And if you want a real audit risk review, schedule a strategy session with my team using the link below. We'll help you clean up your books, protect your deductions, and give you the confidence to file knowing you are audit ready. I am Carla Dennis, and until next time, keep your taxes tight, your paperwork right, and I'll see you in the next video.